Hello, guys, welcome back to another weekly outlook for the week of 7th April to the 11th April. Again, today we'll be looking at some news events, looking at some charts, seeing how the week ahead of us shapes up, what would be the perfect days to trade at, and what we could expect from the upcoming price action. So, let's dive right into it. So, we have a CPI week. We have CPI on Thursday combined with the unemployment claims, followed by red folder news events on Friday as well. We have the GU news release at 2 a.m. and then we have the 8:30 news release, the PPI news release as well on Friday. Uh, this FOMC meeting minutes, so it's not the real FOMC, and we have NZ news events on Tuesday and nothing on Monday as such. So Monday, I am expecting very slow, choppy, consolidating price action. I think the ideal days to trade would be either Tuesday or Wednesday or jumping after the CPI, so Friday. We could anticipate weekly profiles forming according to the particular trades the particular days we might be looking at. So we might expect the low or the high of the week to be set in at Tuesday or Wednesday, possibly. So here we are at the dollar index chart on the monthly. This thing looks fairly decent. We have a monthly fair value gap which has been filled, and prices is pushing above, reacting off of it very well. But again, it remains to be seen how well price reacts off of it, because we have 24 odd days left in the month still before the monthly candle closes. So nothing confirmatory from the monthly price action as of now. We have discussed in the past streams how this leg up might act as a deviation for price to move back inside this 2 year long range that we have. And price has done that very efficiently, maybe too efficiently, because I didn't expect price to move that strongly. As you can see, this particular candle, the price action in March, this is the biggest candle across the last 2 years that we've seen. Obviously, this candle in November 2022 was even bigger. But since 23, 24, in 25 again we saw a relatively bigger candle, and the price action was so fast, giving us rarely any time or any setups to form, any retracement setups or any consolidation or any AMD models to form. And on the weekly, we have a fair value gap open. Price has retraced into it. Not the deep retracement I was looking for, not the deep retracement I would have really liked. I would rather have appreciated price going around this 50% zone, this encroachment level, consequent encroachment level before price moved down. And last week, last 2 3 days were a menace in the market. Markets reacting to how Trump, news events from Trump, and the tariff releases and statements that have been released against the tariff, and how they have been adjusted to counter react to the positions other countries have taken against the US. Markets have reacted very diabolically to that, and doesn't matter how the markets react, in whichever direction they react, but markets have reacted so instantly and with huge volatility that it hasn't given us any opportunity and made us sit on the sidelines for the majority of the time. As you can see, last week here, obviously we have had one, two, three candles which are more or less something that you can't really trade. Uh, we had this consolidation right here, off of which the price started breaking down and broke down really well. We have this daily open gap that has been left after the Thursday open in the candle. Again, not really going to uh, stick to my monthly narrative that price reacts above from it, maybe goes towards this fair value gap, unless the monthly candle closes. I want to see the monthly candle close, and then I want to include my include the monthly time frame into my higher time frame analysis. But right now, what I really want to see, if the price continues from here, what I want to see is price reacting off of this daily order block, overlapping with this daily open fair value gap that was left after the Thursday open, where the markets tanked pretty heavily. On the 4 hour, again, if you see, I want to see some consolidation here. Obviously, I expect Monday to be more or less consolidating. Across Tuesday as well, I expect some consolidation since there is no DXY news event, no USD news event before Thursday, before actually Wednesday. But FOMC meeting minutes is nothing but the notes they make along with the previous FOMC statement release. So before Thursday, I don't really think we have a strong reactive USD news event. So what I am expecting is price to consolidate throughout the first half of the week, that is Monday, Tuesday, and Wednesday. So something like this we can expect, and price to continue on like this. So we have accumulation across the first half of the week. We see some reactive volatile movement during CPI, which more or less is seek and destroy, takes out liquidity on both the sides. And then in accordance with a higher time frame bias, which is obviously bearish on the daily and on the weekly, I want to see price starting to break down after the CPI news release, and maybe it can provide us with an entry opportunity on Friday. Usually I avoid trading Fridays, but let's see how the week goes. If the entire week is consolidating and entire week has a very seek and destroy type profile, we might look forward to trading Friday as well. Or maybe it's possible that we get a move on Thursday itself, but I'm not expecting markets to react or be as volatile as they usually are, or as they have usually been across Monday, Tuesday, and Wednesday. Of course, you can't expect any certainty in these markets given how they have been reacting to any minor or major news events or any changes in the macroeconomics. So that is what I'm expecting for DXY. Moving to Euro USD. Uh, we Similar outlook on the monthly time frame on Euro USD as well. On the monthly time frame, my bad. Yeah. So we have this deviation below these 2023 lows, and prices is somehow more or less reacting on off of this monthly fair value gap. Again, a possibility that if uh, the candle closes below this 50% level, price might retrace back into this fair value gap that has been left open. Very big fair value gap, price might retrace back to it. But again, not having any certain plans including the monthly time frame, as we have almost 3 weeks left in the monthly candle to close. So we can see price took out these highs, then retraced back, tapped into this weekly fair value gap, left open again. Wanted to see a deeper retracement, that didn't happen. On the daily, we can see that the price completed, uh, price swept these highs, this high twice here, and completed a market maker model on the 4 hour. If we zoom in, it was a clear market maker model. Price took out these lows, you can call it the initial consolidation. And yeah, since these lows were taken out, price has reacted strongly off of it, given us a shift in the order flow on the hourly and on the 4 hour. On the daily as well, you can see price has reacted very well off of this and pushed higher. So last week, I the only trade I took, no, actually I took two trades. It stopped out on one, but I took this trade on Wednesday. We swept these lows, these Monday lows on Tuesday, and the price consolidated after sweeping those lows. We can see a small consolidation here across the Asian session. Price swept these lows, the Asian lows again, but failed to sweep these lows. And the 3 a.m. candle sweeping these lows. Go down on the 15 minute. We saw a shift in market structure. Price tapped into it beautifully and reacted strongly off of these levels, this breaker block combined with this 15-minute order block, and price pushed higher. Uh, Obviously, this was like the wishful trade that I wish I didn't place my take profits so early, but I closed my trades around a neat 2 hour right above these highs. And I use DXY as my confluence for this trade. So here as well, here we can see we had a double sweep of the Asian highs before price started to break down, and we had a SMT here as well. This high, this Monday, the March 31st Monday high, was not swept on DXY, but as you can see on Euro USD, the charts are an absolute mess. But yeah, you can see that this high from Monday 31st March was swept on Euro USD. So we have a clear SMT as well, and a similar play on Euro USD and DXY happening across the Asian consolidation. Obviously, again, we have just one sweep on Euro USD, and we have a double, maybe a triple sweep if you can call it, on DXY across the Asian session, and then price started to break down. And yeah, that's the, I can't even call it a clean trade because look at this price action. But yeah, that was the trade I caught last week. The only profitable trade I caught last week. And since this was the low of the week on Wednesday, and since then, look at the price. The price has done weird things. It's very weird to say that I caught the trade, the long here, and price has just shooted up from here almost 3.3%, 350 pips in 2 days on a currency pair is absolutely bonkers, absolutely insane. But yeah, sharing the similar plan for the EU, for EU next week as DXY. Want to see a consolidation across Thursday. Expect a move on the second half of the week. Something like this would be an ideal scenario for me to enter into some longs, following the trade, following the continuation structure. There's a huge possibility that price just breaks down from here. Suppose that we don't get what we want and price does this and breaks down, comes back inside this range, retraces the entire move that we have had, the classic mean reversion that we see on forex pairs mostly. It is a very big possibility that this happens as well. So we need to be wary of all the particular possible scenarios. But we'll see how the week pans out, and I'll be constantly sending updates, outlooks, daily outlooks, charts on my private Discord, which is free, absolutely free. So make sure to join my Discord, link in the bio. And yeah, let's move towards the pound now. Um, very tight range that we had on pound, actually tighter than uh, Euro USD as well. This was the range that we were trading in. Now, if you take a look at it, uh, a very tight range. We didn't take out these lows as we did on Euro USD. So this was a proper deviation, a proper SMT. Something like this happened on EU, but these lows weren't swept on GU. And now that we've seen a complete move upside and then a retracement on Friday, we see that now these lows have been swept. If I don't know, these highs are important as well, because on the weekly we can clearly see that this is a sweep of the highs as well. This is a pure seek and destroy price action on the weekly. But on the daily, we have a bit more conviction as to price has closed above these highs with strong conviction. It remains to see how the markets open on Monday and how the price reacts off of this particular level. Will we see a deeper retracement into this fair value gap, or will we see a consolidating structure here before price pushes on forward? So, very narrow, very tight range, a possible AMD scenario as well, where we might have something like this playing out, particular accumulation that we have seen across almost 1, 2, 3, almost 3 weeks. Then we see manipulation on the higher time frame, and then we have a market make a buy model, something like this panning out. This will be our highs. So if something like this happens, I think it'll the ideal scenario for a bullish price action particularly. And yeah, that's something I want to see on GU. Again, price action is very steep as compared to EU. EU at least gives me some conviction that yeah, price has more or less closed strongly above these highs, this consolidation, this previous high which has been swept not once but twice. Price is closed above it, and when trying to retest this particular level, this level, price has come here and bounced off of it again. But on GU, you can clearly see that the first up move wasn't that dominant relative to EU, and price has since retraced back inside this range, maybe taking out these lows as well. So, for bullish price action, I would be looking at EU as I see more strength on that pair. But I'll be keeping my eye on GU as well, as it could possibly deliver a very comfortable market maker buy model in the upcoming weeks. The Japanese yen futures um, on the monthly. Again, the monthly scene is to what we particularly want to see of the monthly is still to be decided if it will really pan out or not, because of obvious reasons. But what I want to see is maybe the USD JPY pair is it will provide us a better read coherent with DXY. USD JPY has pushed lower as well. We have a sweep of these lows inside this fair value gap and a possible. So we had a very simple internal range to external range movement here. Then from this external range, we tried to push towards the internal range. Almost we took out these highs. Now we have again taken out the external range. On the daily, there's a big possibility that this high might get taken out. Depends on the kind of price action we see on the 4 hour, because we have a sweep of the lows on the 4 hour as well. Thursday lows have been swept by the Friday lows, and price has pushed on since then. If you see, we have more or less a shift in market structure too. It'll be more clearer on the hourly, as we can see, very clear shift in market structure here. But it remains to be seen if I want to see these highs, almost equal highs, to be taken out. I want to see how price moves up. I want to see how price reacts off of these sweeps and this particular fair value gap. And if we have a more clearer play with a market maker buy model forming on the 4 hour, follow in coherence with the weekly sweeps, I think that would be the ideal scenario. Something like a market maker buy model where we see some accumulation, some manipulation, and price pushing up, taking out these equal highs. That will be the ideal scenario. But if not, we also have one more narrative where the daily has closed well and truly below these lows and the March lows, and price can well and truly consolidate a little before giving us a move like this. So both the scenarios uh, are very possible. Depends on how DXY moves, because if you're expecting DXY to do something like this on the 4 hourly, if you are expecting DXY to do something like this, where it consolidates and gives us manipulation and then starts breaking down even further, you might see something similar on the USD JPY pair as well. But again, this particular uh, gap down open that we had on Thursday is fairly important, because if this level gets taken out, if some my bad if somehow price just manages to do something like this and close above this and maybe follow on from here, then we might see an even deeper retracement where this particular last week's high, so March highs might get taken out as well. So all eyes on the CPI on Thursday, and from there we'll have a more clearer outlook of where the price wants to move. And the Australian index looks fairly cooked. It could look decent. Again, the monthly has a lot of time to close. It could look pretty decent if prices decides to, you know, push higher from here. Maybe give us a shift. Just take out these highs, push higher from here. Again, there is nothing from. I just. It's very hard to understand to trade this pair because it's just very moves very weirdly. Didn't give any impulse moves along with like Euro, USD, and GU. Gave us a lot of movement to the upside since the start of the year. Both AU and NZ pairs have been just consolidating since the start of the year. This is the start of the year here. It has just consolidated inside this very tight 4-5% range, 4.5% range. It has taken out these lows, gives multiple sweeps of the 2022 lows, but since has just failed to give us an impulse move to move higher. Obviously, we had this sweep followed by a shift in market structure on the daily, but again, this deep retracement just took out any conviction from this particular move, that up move that we had. This deep retracement, look at the volume, look at the uh, displacement that we see. This is not really a retracement. This more or less looks like the actual move. And this, look at the choppy candles, look at the slow price action. Both AU and NZ are yet to provide a strong move, more conviction, and yeah. Since then, I'm just really happy that I don't have to look at these charts. I don't have to trade these charts. I'm just sitting on the sidelines, chilling out. As you can see, on NZ as well. I mean, even if you consider this to be a bearish price action, you consider the entirety of this to just be somewhat a channel consolidation, right? So this, look at it as a channel in which price is consolidating. Price took out these highs, tried to break out of the channel, and then started dumping from here, right? This narrative suits it perfectly, but you go down to the 4 hour, just pure dump, nothing else. Like no pushes, no places to enter in, no places to form trades, and no real retracement. So very disheartening to see that you have your price action and anticipation, or as you can say, the read on the markets on point, but still price just doesn't give you anything. And that has been the story for AU and NZ, for me particularly, for almost a year now. And yeah, again, couldn't really care less. So on to the indices now. I think this looks absolutely terrible. I think the promises that we saw before Trump's presidency and what we're seeing right now is something that is absolutely two opposite sides of the coin, because almost 17-18% retracement. We had the high here, the top here, and since then we have retraced almost 18%, and that's absolutely insane for economy like the US to see such steep retracement, if you're even calling it if you're even calling it a retracement, because at this point, if this particular zone fails to hold, I think the next level is this. Then we might come back to this consolidation. So this particular zone is very important. This particular weekly order block or a monthly order block is really important. We need to react off of these lows. We need to react from this particular order block, because if this order block, this level fails to hold, we could see a massacre, where since the start of the year we could see a possible 30-35% retracement, and that will be absolutely diabolical. Again, not much to see. uh, I took a small position, a small buy position on Monday, and we had a sweep of the daily. I jumped the gun and got early into the position. We have a sweep. We were forming a sweep of the daily towards the London close, or I think the late New York session, the PM session, and we saw this consolidation across the Asian and London session, followed by a wick taking out these lows around in the AM session, and then we saw displacement move. So a very simple play. Obviously, it was Monday, not really the ideal day for me to trade, and a Monday without news is usually very choppy. But still, got into some longs, took some profits off, and yeah, the idea was fairly simple, worked out really well. Tried to add on some more longs to this, but just didn't have the conviction. I don't know why, because the idea played out really well. uh, yeah, I think this was a very simple 2 hour. I wanted to try and add something below these lows, and the price reacted off of these lows really well from this particular order block, this accumulation zone or order block or whatever you want to call it. But I just saw this candle, and whatever position that I took here, somewhere here, I exited it here, and the price just shot on from here and went to take my take profits. So yeah, all in all, the idea was good. Kind of a risky trade, but fitted my criteria, so why not? But since then, price action has been completely diabolical, something that I want to avoid. So yeah, on the NAS as well, we are around a very tricky, very important level here. We don't want to see price closing below these lows, and on gold. Gold has just been flying, moving up every week. It is like 1.5, 2% up net, and finally some retracement we see here, because we are inside this order block on the week on the daily. Obviously, these lows are week lows as well, which can be taken out. On the weekly, we have this fair value gap open, so we are yet to see how price retraces on gold, because I am expecting some retracement, but I don't know from which particular zone price will react, because obviously on the macro level gold is bullish, on the global economic level also, on the fundamental level also, and in general on our high time frames on the charts, gold is really bullish. So I am waiting. to see how price reacts, how the next week pans out, more or less. And I'll be updating throughout on my Discord. So make sure to just join the Discord, look at my trade ideas. If you agree with it, maybe absorb them then. And if you don't agree with it, yeah, just move on. But yeah, I would really appreciate it that you join my Discord. It's absolutely free. So on Bitcoin, I think Bitcoin has held really well across this tumultuous time that the indices are facing. Bitcoin has held its own really well, and that's a good sign, a very strong sign for all the bulls, for all the people who are expecting Bitcoin to jump back towards the 100,000 mark, because Bitcoin could have easily tanked when the indices are going down 6%, 6.5%. Bitcoin could have easily tanked below these lows, maybe towards this consolidation that we saw towards the mid of the last year. But Bitcoin held its nerve really well. And if the indices are to face some relief, if the SPX and the NAS is to react off of whatever ideas and zones that I presented, somewhere here, and they react and push higher, maybe fill in some gaps here, I think Bitcoin could easily take out these highs. These are some weak, almost equal highs that we are seeing here. And the idea would be to wait, because price is consolidating around these lows. This low hasn't been taken out yet. This is a strong low, and inside a fair value, inside a order block. So let's see how price reacts here around these lows. I think I want to see a uh, shift in order flow on the hourly for me to have conviction and somehow believe that, okay, so this has been a narrow consolidating range, almost a $7,000-8,000 range, and price can just, if it just comes down here and gives me a change in order flow on the hourly or on the 4 hour, I might have enough conviction to push for getting into highs. I think ETH looks absolutely fucked. It looks absolutely cooked. It is done for. Jokes aside, I think ETH looks like a prime example of how crypto coins and your altcoins kind of more or less die in terms of volume, trading volume, or in terms of strong volatile price action when Bitcoin is not performing well. But you can still see that Bitcoin is fairly bullish, still fairly bullish. If you zoom out on Bitcoin, even if, Bitcoin retraces almost, even if it still retraces 20 odd percent, it'll still be bullish. If we have a scenario where we see something like this, price will still be bullish. But if we see that retracement of 20% on Bitcoin, I think for ETH it'll be absolutely, it'll kill Ethereum. Because if we have a 20% retracement on Bitcoin, if it's exactly mirrored on Ethereum and something like this happens, I think we take out these lows. We go sub $1,000. That's the worst that could happen, and that's like the worst case scenario possible for crypto in general. Altcoins die or meme coins die, and Bitcoin will still look bullish. So we have to wait and see, be more patient. Have I still have my hands on my gun, waiting to just pull the trigger as soon as I see a compelling setup where I have more conviction. But till then, I'm going to sit out on the sidelines. I'm going to send out ideas, my outlook on how the market is looking and feeling. But till then, you stay safe. Happy trading. Bye bye.